Are you ready to tackle tax season without the stress? Whether you're earning your first royalties or managing a growing author business, understanding your taxes is critical to keeping more of your hard-earned money. Today's guest is a good friend of mine and longtime supporter here of this channel, Erin Engelbrecht, a certified public accountant with over 20 years of experience helping individuals and small businesses get their finances in order. Erin combines her deep expertise with a passion for simplifying the complex world of accounting, making her the perfect guide to help authors like you prepare for the 2025 tax season. Welcoming back to the channel here, Erin, how you doing?
I'm great, Dale. How are you?
I'm alive and kicking. It's always great to get to introduce you. There's so many times I bring friends here on the channel, and I think it's always just a special time when I can bring you here because you're one of my favorite people. You're one of my favorite buddies.
Well, you're one of my favorite people too, but don't tell any of my other clients that.
Yeah, exactly. I'm one of your favorite authors. There we go. How about that?
Yeah. Yes, you're one of my absolute favorite authors.
There you go. Well, before we do jump into the interview, obviously I'm going to be asking you some questions and such. I do want to load everybody else up here. If you're watching this live or on the replay, you have questions, please put a Q before your question and let us know. Nothing's off the table. She's an open book, but she does assure me that she specializes in taxes in the United States, not internationally speaking. So my apologies. She will do her best to answer you, but if you happen to be international, she's probably not going to have all the answers for you. Does that sound fair, Erin?
Yeah, it's impossible to know everything.
Right.
Yeah, you have to kind of focus your expertise on certain arenas, and unfortunately, other arenas they fall off the radar.
I totally understand. There are times where I have some viewers that will ask me about things that in specific regions. They'll be like, does Google Play Books, work with South Africans? And I'll be like, I don't know. Like, I know
Right,
everything in the United States. But how funny that I brought up South Africa around you.
right.
That happened to be a happy coincidence. All right, so let's go ahead and jump into things. It's getting into 2025. And obviously we got to start preparing for our taxes. And this is something that Kelly and I always come and we speak with you, like all the things that we need to get in place. Let's start it out with the very basic. Let's say I'm a brand new author and reporting my earnings through royalties and affiliate earnings and things like that has just come in. What are the best first steps for me to do as an author?
Say the first step is, regardless if you formed an LLC or if you didn't and you're just functioning as a sole proprietor, either way, the best thing to do is to open up a completely separate bank account. So if you have an LLC, open it up under the LLC's name. If you don't and you're operating as a sole proprietor, then just open up another personal account. And best practice is to run all income and expenses through that account. It just helps you segregate everything from your personal activity, and it just makes things infinitely easier for everybody involved. So that would be the first step I would do, is open up that account. And then when you set up how you receive your royalty payments or affiliate payments, make sure that you use that bank account so you're getting the money deposited there. So that is not an absolute requirement, but it's very, very helpful. And if you are an LLC, if your business is an LLC, I would say it is almost a requirement, but it'll make your life infinitely easier for you and your tax preparer.
What would happen if I were to forego that advice? Let's say I start receiving all my royalties and earnings. Let's say it's a meager amount. We'll say less than $600 as a random thing. Is that going to be a real deal breaker? Is that going to be something that I could potentially run into some issues? And if so, what would those issues be?
It's not an absolute train wreck, especially for people first starting out, because there might not be a lot of volume at first.
Mm-hmm.
But what you would have to do if you didn't set up a separate bank account is you would have to physically go through your bank activity, like pull your statements up, pull it up online, however you like to do it, export it in Excel, and you would have to pick out the business related transactions on your own. So there would be some manual labor involved if you wanted to parse out the business activity.
What would you say would be the big dangers in doing something like that? Is there any possibility for, let's say, for instance, the IRS doing an audit on my account? if I were to do certain amount of things that they might seem shady or at least questionable to them, that raises red flags.
All right. Okay. There was a lot going on in that statement. So,
Yeah, so much.
let me, yeah, because the audit thing is a kind of a separate topic. But
Okay.
the risk always is we are all human and we all make mistakes. So there's always, you run the risk of not pulling out everything that was business. So you might miss some income. Worse yet, you might miss an expense you could have deducted. So you always run that risk of anything done manually. That's why I always recommend either getting that separate account or using some sort of accounting software where you can adequately track your business income and expenses. As far as audit concerns, like I could go on and on just for an hour about auditing, but
Yeah.
just to give you an overhead view, because a lot of people have misconceptions about how people get selected for audit.
Yeah.
I hear a lot of just people will run questions by me and say things like, well, I heard that if I amend my return that I'm more likely to get audited, and that is absolutely not true. So there is a lot of misinformation about how tax returns are selected for audit. Statistically speaking, it's a low probability just from a statistical standpoint.
Yeah.
But if you throw up the red flags, you throw up the red flags, period, end of story. So the real quick summary of how tax returns get selected for audit is every tax return processed by the IRS, it runs through a scoring system. And that scoring system is very top secret. It's very proprietary. The IRS does not disclose any of the details on it, but each return is assigned a score based on this scoring mechanism.
Okay.
If the return goes over a certain score, and again, we don't know how it's scored or what that threshold is, but once it goes over that certain score, then it gets kicked to an actual human being to review. And then the human being decides at that point if it's worthy of an audit or not. So that's how they're selected. But again, we're not sure. They don't tell us how they score it, what makes the score go up, what makes the score go down. But what I do tell clients is if everything you're claiming on your tax return like is a legitimate expense, like you have receipts for them, it is actually a bona fide business expense. Even if you do get selected for audit, you will more than likely get through it. It's just a pain and it's scary and it's inconvenient and all those other adjectives that you can think of. So that's more or less how an audit works in a nutshell. But if your expenses look reasonable, like they're not these outrageously high amounts, if you're careful about reporting your income and not under-reporting, the chances of getting audited are low. And even if you do get selected, if you can justify everything, then you will probably get through it unscathed.
Very interesting. I know I did an audit, in the early 2000s, and this was back when I was a personal trainer. And so I remember I was freaked out, but thankfully I had all of my paperwork kind of put together, everything itemized and such. The funny thing is I've gotten way better since working with you because everything is very, very meticulous how I try to keep it put together. It certainly helps having you manage some of the bookkeeping for me. But I know back in the day, I freaked right out. I was like, I got this letter in the mail and I'm like, I didn't do nothing. I swear I haven't been doing anything illegal. I'm just being a personal trainer. And I remember just kind of being freaked out. But it's kind of interesting to hear that it's almost like an algorithm that they put people through in order to determine whether they're going to audit them or not. And it's not just simply like, well, this person looks like they're doing something shady.
Correct. Yeah, it's nothing ever personal. It's not like, oh, I did this and now I'm more likely to get audited. It doesn't work that way.
Okay.
But what can happen is if you do get selected for audit for a certain tax year, if they start seeing a lot of irregularities, that could open up other years to get audited. Like, oh, like look at here, you misreported this and where's all your receipts? So you definitely want to keep those receipts, keep your ducks in a row. As always, it helps to have a CPA or an EA, which is an enrolled agent, on your side to just so you have someone to bounce ideas off of throughout the year, like you and Kelly do. Like, I mean, I get peppered with emails throughout the year which I love because I want people to be proactive. I want people to be thinking about these things. So I want you to be proactive versus reactive because it's easier to deal with when it's proactive, because if it's reactive, it's like I might not be able to help.
Yeah, thankfully I stay on top of everything. And so let's walk it back just a little bit. As far as tracking all of my earnings and expenses, what are some of the best practices to do? And especially if I'm working on a fixed budget. Let's just say, for instance, Erin, I love you to death. You make me do QuickBooks. I wouldn't do QuickBooks if it weren't a demand of yours. So is there a cheaper alternative to something like QuickBooks, or is that something that everybody should consider getting, or is there an alternative to that?
There are definitely alternatives. There's a lot of free accounting softwares like Wave Accounting, WAVE. The issue with those kind of softwares is they have limited functionality. So if you need a lot of bells and whistles, it's not the software for you. But for a lot of smaller businesses, especially service-based businesses that don't sell any kind of product, um, usually something like Wave is enough. However, if your business grows or it gets more complex, that software may not grow with you. So you may have to convert down the road to a software that can fulfill your needs. And then you'll have to go through that learning curve of perhaps learning a new software. So yes, there are alternatives out there, but you want to make sure that it's right for you and it's going to grow with you. Or if it doesn't, that you will be prepared and willing to make those upgrades and changes and that learning curve that you're going to face.
So it's almost like if I me investing in something like QuickBooks is almost future proofing my business. I'm investing in something that might be a higher premium, but at least I have all the features and bells and whistles that I would require for my business.
Yeah, I mean, you're never going to outgrow it because it's just in your industry, just there's not a terrible amount of complexity like there would be, say, in manufacturing, where they have 60,000 different part numbers that they have to track and there's inventory. So with your type of industry, QuickBooks is perfect and you don't need these really super expensive accounting softwares. Most people can use the lowest tier version of QuickBooks like you do, the Simple Start version.
Yeah.
And usually that's more than enough because you can, connect all your bank accounts. So as long as, again, all of the incoming royalties or affiliate income or sponsorship income that you may have, you want it to be all funneled into one account. You don't want it all over the show because, again, you may be setting yourself up where you're going to miss something. Where if you keep it simple and have just one centralized account, it just makes it infinitely easier. Now, I know some people do set up multiple accounts. Oh gosh, I can't remember the name of the program. Oh, Profit First, where they have like all these envelopes where he has you set up like 12 different bank accounts. and, and yeah, it, it's for like a specific type of person. It doesn't work for everybody. But then, yeah, it gets a little complex. But I think for most people, the Profit First method is for people that are usually bad with their money, and it helps them become good with their money because
Yeah.
it's a system. So some people swear by it, and it works for them, but it's not for everybody. And that's true
Yeah.
for anything in life.
True.
There's nothing universal where everybody loves it or it's going to be helpful for everybody. So,
Hmm.
but I would say just to keep it simple, just start with one account because here's the deal. You can always open up more.
So true. So
But
so
if you
true.
go start with 12, then it's a real pain to pare it down because it's like, oh, well, that's going there. So now I have to log in and change the routing number. And then you invariably forget one. And then it's like, oh, this bounced back. You didn't get your money because the account doesn't exist. So those just keep it simple at first, and you can always get it more complicated.
Okay, now that we're going into the upcoming tax season, what should I be doing to get everything in order for my CPA?
Well, tax issues is really an ongoing process year long. And again, it's like more of that proactive versus reactive. But I mean, you can't go back in time. So if we're dealing with December, okay, the year's coming up. So I would say start getting your ducks in a row if you haven't already. Start pulling out like what did I make? What did I spend? What did I spend it on? And that's a big thing is parsing it out by type, like advertising, office supplies, software expenses. I'm trying to think, dues and subscriptions, like if you have an annual membership, education, you want to kind of parse it out by category. And you want to do that anyway, because you need to know how you're spending your money
Yeah.
and make sure, like, am I spending too much on this? Like, am I spending too much on advertising? Am I getting business from this advertising? So it's mostly beneficial for you, the author, the slash, author slash business owner, to have that data anyway, so you can assess how your business is doing, how your venture is doing. So I would say make sure you've got receipts for everything, whether it be a paper receipt or a scanned version, which is perfectly acceptable. You don't have to keep paper anymore. The
Yay.
IRS has been, yeah, the IRS has been accepting scanned copies since 1997, actually. So
Wow.
as long as you don't alter the scanned image in any way, you're good to go.
Yeah.
Now, so I scan, like if I do get paper receipts myself for my, for my practice, I scan them and then I do shred the paper one. But if you want to keep the paper one just as backup, go for it. But the scanned version is enough, just so people know. So I would just make sure you have all your receipts. If you happen to have any mileage, make sure your mileage log is current, because technically the rule is you're supposed to maintain it, meaning an ongoing maintenance, not like I didn't do it all year and I'm going to cobble it together at once. You're really not supposed to do that.
No, you shouldn't.
You really shouldn't. And
No.
use an app and just call it a day.
Yeah.
And also like home office, which I know you kind of ran that by me before, so I'm not going to go into depth now unless people want me to about home office.
Yeah.
But if you are planning on a home office deduction, there may be certain things you need to gather up to calculate that. And also, if you do want to work with a CPA or an EA for tax preparation, now would be the time to reach out to them. January is almost too late. And I know we went over this last year as well, but you might have new viewers, and all the good CPAs are taken. It's like when I say, we're all the good men or we're all the good women, they're all taken.
Yeah.
Same with the CPAs, they book up very quickly.
Mhm.
So now would be the time, if you don't have one, if you want to start working one, now would be the time to start getting recommendations from maybe colleagues, or however you want to look for it, like Yelp. I don't know.
Yeah, that's true. So you brought up, and I'm going to touch on two of these points. The home office one, I think that would be fantastic for us to hit. But let's hit categories first. Categorizing my earnings and expenses. How do I find the proper categories, and what's a good way for me to know what goes where?
So with revenue, that's pretty easy. So on the tax return, revenue is lumped into one number. So if you want to break it down for your purposes, like we do for you, you have your course sales, you have your book sales, you have your sponsorship income, affiliate income, royalties. If you want to separate that out for your own purposes, you absolutely can do so. But on the tax return, it is rolled up into one number. Any kind of income that's generated from your primary course of business. Now, if you have kind of ancillary income, which would be like interest income, that is reported separately. But I would say, for the most part, most people don't have a lot of ancillary income. They'll usually just have royalties, in your industry, or that affiliate and sponsorship. So on the return, it's one line item. Now, expenses, there's no hard and fast rule. What I tell people is, if they want to get an idea, like for anyone who is like a single member LLC or a sole proprietor, you can do a simple internet search and put in like IRS Schedule C, which is the form you would use to report income and expenses. And you can take a look at it and see what categories is on that schedule. And so that would be like the bare minimum. There is a section where you can break down more detailed categories. So it's going to have pretty broad categories, and you can get more detailed. I don't think the IRS ever gets upset if you're more detailed. They don't like it when you're vague or less detailed. So I usually tell clients to stay away from descriptions like other or miscellaneous, because that does not tell the IRS what you spent that money on. So I would say err on the side of being detailed, but you don't have to be like super granular. So I would
Have
say,
a full novel explaining this one expense
oh
for a
my gosh,
pin.
yeah, like that would be crazy. I mean, you wouldn't get in trouble for it, but it's not necessary. It might be like too much legwork on your end to do something like that.
Yeah.
So you want to always make the reporting detailed enough for your purposes,
Okay.
on how you're spending your money, like just for personal assessment. And you want to be detailed enough for the IRS. So yeah, I would say for the sole props, single member LLCs, get a Schedule C and look it over and see what expense categories there are, and that's your minimum. If you are an S corp by any chance, again, you can just pull like an S corp return, which is a form 1120S, and you can look over just a blank form and see the expense categories there. And that's going to give you some semblance of an idea of how detailed you're going to have to get at a bare minimum.
Nice. I was not aware of that. That's why I always just reach out to you. I'm like, what do I categorize this
Yeah.
under?
Yeah. IRS Gov is definitely your friend.
Yeah.
That's where you can pull any blank tax form you want. So I do encourage people to kind of diddy bop around irs.gov because it's a great place to get your questions answered. Like if you have home office, just in the search bar, put home office and you'll get nice, very plain language explanations for your stuff. So IRS, and they're the ones you want to make happy. So you want to definitely listen to their advice. So I do, advise people to refer to irs.gov because they're the ones you're going to have to make happy at the end of the day.
So true. And not just your CPA.
Right, right. And hopefully the CPA you have or the EA you have, that they're up to date on all the rules and can help keep you in compliance. But if there's ever a doubt, like if maybe you're getting advice, and whether it be from your CPA or from a friend or TikTok, which I don't recommend, if something doesn't sound right, you can always go to irs.gov and look it up yourself. But I understand what for some people that taxes are very overwhelming and they don't even want to deal with it. But for people who
Yeah.
feel more comfortable doing that and maybe feel a little bit more savvy, by all means do it. And I encourage people to do it.
Nice. So we covered just briefly about mileage and talked about it. And one of the nice things about our mileage log is we literally have a mileage log inside our car. And Kelly is so
Yes.
freaking diligent about it. She's always just like, oh, did you go do that? That's business related. You better be writing those miles down. Like there's no putting it off until the end of the year. No, you can't even put it off to the end of the day. Kelly just won't let that slide.
Yeah, she's a rock star.
Yeah, and the other thing that she obviously manages is, of course, the office space, is measuring that out and making sure that you have all the dimensions. And so share with me a little bit about this expense. I don't think a lot of people realize that if they're using like a home office, that they could use that towards their taxes. So how does that work, and what's the best resource for us to dig into? Probably IRS Gov. I'm sure it's probably going to give us more information, but if you got some more details about it, it'd be help out.
Yeah, there's a publication the IRS has it solely covers home office. But so the first and foremost rule is that if you cannot have any kind of external brick and mortar location, now in your industry that usually does not happen. Because you're not selling product, not in that sense. Like you don't have like a retail location, and you're not providing a service where a brick and mortar location is warranted. Like if you were a therapist or a personal trainer or someone like me. So for the most part, most authors and self-publishers won't have that external brick and mortar location. So as long as you don't have that, there is a home office deduction unless you're an S corp. See, this is where it can branch off. So I'm going to assume most people are
It's like
not
a
S
choose your
corp.
own
So
adventure.
yeah, yeah, yeah. I always died on those. And then I go back and cheat and pick something else. But so if for anyone who is filed as an S corp, this is not going to apply to you at all. So I want to make that caveat. And
Okay.
and just a caveat in general is my what I'm saying is very generic advice.
Okay.
It's just to create awareness. So I would always recommend consulting with a CPA or an EA to discuss your specific situation. But in general, so for home office, so you have to have like a solely dedicated space in your home where you're conducting your business. You're doing the work itself.
Kind of like
Yeah,
this.
I'd say like where you're at right now.
Yep.
It cannot double for something else. So if say you have a bedroom in the house that you're using, but it's also like the kids' playroom as an example, and the kids are playing in it every day. technically that would not qualify. So it has again,
Get
the
out,
keywords
kids.
are, yeah, yeah, get out, play in the living room, go play in the backyard. It's snowing, but that's all right. Make a snowman. So you want it to be a solely dedicated space. Now, how would the IRS know? They wouldn't unless they came to your house and checked. But again, like, be honest.
Yeah.
Don't just be honest. That's what I tell people. Just be honest. It's fine.
Yeah.
The home office deduction was never meant to be this humongous deduction.
Yeah.
It's not going to turn the tides, but it does obviously help. So, of course, you want to take it if you're allowed to take it. So, you want the space to be solely dedicated to where you conduct your business. Storage space does also count. So say like you
Oh.
have a closet or you use part of your garage to store stuff, like maybe you do print your books and you have them in your home and you ship out your own books. That space, that square footage dedicated storage would also count,
Okay.
just so people know.
And of course, with that storage space, so there can't be that overlap of personal with professional. Am I right?
No, you really shouldn't.
Okay.
Maybe like delineate, like put a piece of tape down, like this is personal storage and this is business storage or something. So,
Okay.
so there are two different methods for home office deductions. The first one's called the simplified method, and it's very simple. All your tax preparer would need is the square footage of your home office slash storage area. That's it. It is capped at 300 square feet. Last I checked, I don't think they're going to move that one around. And it's $5 per square foot. So the max deduction is $1,500 in a year.
Okay.
The plus about this method is, well, there's two major pluses. One, there's no record keeping. You give them the square footage and it would probably be the same every year unless you upgraded or moved and have a different office, but it's a static number and it's capped, which is the other advantage is it's capped where you can only go up to 1,500. So that methodology is not audited too much because it is limited to $1,500. It's never going to be this crazy deduction. So less record keeping, less likely to be audited. Those are the two major pluses. With actual expenses, now it gets a little trickier because there is a lot you need to track. So not only do you have to provide the square footage of your home office slash storage area, but also the total square footage of your home to calculate what percentage of my home is being used for business. Is it 5%? Is it 7%? Is it 1%? And then you start adding up certain home related expenses. So examples would include mortgage interest, homeowners insurance, property taxes, HOA dues. If you're a renter, rent, utilities, water, electric, trash, sewer, natural gas, things like that. And there are more, but I'm not going to list them all, but your preparer will give you a list of what you need to provide to them, just to give you an idea.
Yeah.
So then you have to say, how much did you spend on electricity this year? How much did you spend in pest control, in HOA dues? And then they're going to add all that up and then multiply it by that percentage of how much of your home is home office. And see, so that's more record keeping. That's more stuff you have to track. It's more numbers you have to add up and provide to your tax preparer. But also, it is right for over exaggeration.
Yeah.
So people abuse it. They're like, they pad the numbers a little bit and say, oh, yeah, I spent this much on electricity and that much on this to purposely inflate that dollar amount. Because unlike the simplified method, there is no dollar amount cap.
Yeah.
It is whatever it is. But again, if you are inflating numbers and padding them, you are opening yourself up to more audit potential. So it just always pays to be honest. I know people want to lower their tax liability as much as possible. I understand that. I mean, I'm in the same position, but just stay honest because it's not worth the trouble. It's just not worth it, I don't think.
Yeah, I
Not
think
to me.
you're right. Boy, I tell you, we've blasted through a half hour like it's nobody's business, and I want to go into
Whoa.
the live question and answers. So,
Okay. Okay.
but I'm going to
Sure.
start out with something very unique, and some of the viewers have come to enjoy this. It's the lightning round, but this time we've tweaked it just a little bit for the fact that you're not an author. Although one of these days I'll probably convince you to become one. It's time for our 2-minute lightning round where we dive into rapid questions designed to spark quick, honest, and spontaneous answers. Each question is aimed at giving viewers fresh insights into my guests' unique experiences and personality, all with a twist of fun. Our guest
Oh, I'm
has
scared.
2 minutes to answer each question or say pass and move on. Expect candid thoughts, fast paced reflections, and maybe, just maybe, a few surprises. Erin, are you ready?
I was ready as I can be. Yes.
Yes, here we go. All right, we're going to go ahead and start the clock as soon as I finish this question. What's the last book or article you couldn't put down?
Next Level by Dr. Stacy Sims.
Coffee or tea during tax season?
Coffee.
If you could have dinner with any financial expert, living or dead, who would it be?
Oh my gosh. Financial expert. I've never really thought about that.
You could say pass if you want.
I'm going to pass because I honestly don't know.
Favorite way to unwind after a long day of numbers?
Yoga.
What's your dream travel destination for a tax-free vacation?
Oh, wherever has 80, 85-degree weather and like a lake or a stream and pine trees and no people.
One word to
Where
describe tax season.
crying,
Most underrated tip every small business owner should know.
underrated. Use tax software.
Favorite snack while crunching numbers.
I normally don't snack while I'm crunching numbers, but I love cashews. That's like and pepitas.
If you could have one superpower, what would it be?
Gosh. Just one? Oh, that see that's what makes it hard. It's just one. Um, Probably the ability to talk to my cats.
Biggest pet peeve when reviewing someone's finances.
Finances. Uh, just vagueness, like the that miscellaneous or other. That's a pretty big pet peeve of mine. Yeah.
What's one mistake people make when it comes to taxes? And that is time. That is time. So you got through 10 of the 20 questions. Not bad.
Oh wow.
I did kind of blindside you. You weren't ready for this for the lightning round.
No.
But I do want to, of course, ask one final question. I ask this of all my guests. What advice do you have for aspiring authors and self-publishers out there?
Keep good records and hire an accountant as soon as it's in your budget.
Short, sweet, simple, to the point. I love it, Erin. All right, we have some questions for some live viewers here. So I want to give a shout out to a couple people. First thing is DL Tillery. Thank you so much for popping on in. I use TurboTax, which comes with the option of identity protection and a person to deal with an audit if it happens. Any words on TurboTax?
TurboTax is fine as long as you understand how to use it.
Gotcha.
The most common issue I see with TurboTax is, people, they gather their information, they punch it in, and I haven't used TurboTax in a really long time because I'm not allowed to use it. But the last I checked is, as you're working through all the screens and whatnot, on the top, it'll tell you like what your result is so far, whether it's a refund or you owe. And so sometimes people don't like what they see, like maybe they owe or the refund's not big enough, whatever the case may be.
Yeah.
And then they start fudging numbers. And that's where you get in trouble. I see it all the time. I hear it from people, like especially new clients that are telling me, what they've used in the past. So TurboTax works perfectly fine if you use it as intended. So just beware. Like, unfortunately, like the result is the result. If you don't like the result, then you need to understand why you got that result. And then maybe you can put things in place so that result won't happen the next year. So TurboTax is perfectly fine. The audit protection, I don't know much about that service offering. But again, if you are entering accurate data and you're not, again, like fudging the numbers to get the result you want, even if you get audited, you're going to survive it, because you'll be able to justify everything. You have the right documentation and paperwork.
Mhm.
And then I know you can consult with a live expert. Again, like I don't have any experience with it. I've heard feedback from people. It's really going to depend on who you get. It's
Yeah.
I don't
It's a
know
mixed
what
bag.
Intuit's hiring practices are.
Mhm.
I don't know what the requirements are for these people they hire. So I don't know the quality you're going to get, but I would take like an independent accountant or tax preparer's point of view versus a paid employee. That's my opinion.
Yeah.
Um, just I have not I have no personal experience with it myself,
Gotcha.
but I believe that if you use TurboTax as intended, it does work correctly. Of course, it's going to calculate everything correctly, but it's garbage in, garbage out.
Todd
Yeah.
Davidson said, "Is there ever a benefit or a need to file quarterly?" Oh my gosh, let me tell you, ever since we filed things quarterly, life is so much easier. I'm just going to say, personally speaking, like, because we're not getting nickel and dime to death come that annual tax, reporting and such. But rather than me sharing my personal experience, I figured probably let's cue you up here. So, is there any benefit or a need to doing quarterly reporting?
Reporting per se, it's a quarterly payment. So you just submit the payment. There's no form that you submit it with unless you mail it in. Then there's like a payment coupon.
Mhm.
But I mean, honestly, who writes checks anymore? I don't really know a lot of people who write checks. I don't know if anyone under the age of 30 knows how to write a check or has been shown how to write a check. I mean, not their fault. They just never been shown because
Yeah.
checks are just they don't really exist,
Yeah.
or they're just hard to come by.
Yep.
So all it is a payment. And it's, yes, you can mail in a check, and there's also a couple options of online payments. You can pay directly on irs.gov, or you can set up what's called an EFTPS.gov account, where you can also make payments. The benefit with the EFTPS account is it saves your payment information. So it's quick. Like you log in, you put in the payment amount, you put in the payment date, you hit submit, and you're done.
Mhm.
If you go to irs.gov, you have to put in your information, like, I mean, everything: name, social security number, date of birth, address. I mean, like a slew of information you have to put in every single time to make a payment online. So I always tell people, just get an EFTPS account. Just it makes your life easier. So technically, these payments may be required. It depends on how much you make. And again, this is when you get with your accountant, and your accountant can help you determine if you need to make these payments or not.
Mhm.
So, what I tell people is, when you own your own business, things change. Because when you work for an employer, when you get your paycheck, it's not your pay, there's taxes taken out.
Yeah.
So, your employer is doing you a favor essentially. They're taking taxes out of your check, Social Security out of your check, and then they're turning it over to the feds or the state or whoever.
Mhm.
So they are doing, so you're paying into the system every paycheck, whether you want to or not. Well, when you work for yourself, that vehicle is gone. You do not have somebody pulling this money out and giving it to the feds and the state. Now you have to do it, because the IRS doesn't want you waiting all year and they get nothing from you. And then you file and have this big balance due, and then you pay it one lump sum. They don't want you to do that.
Mhm.
In fact, they penalize you for doing it. It's called an underpayment penalty.
Yep.
It's a kind of a misleading term, but that's what it means. Is that the IRS is saying we didn't get our money when we wanted it. So there are rules and calculations to figure out how much that payment is, but the payment dates are the same every year.
Okay.
And this is assuming these dates fall on a weekday. So there, if it's a weekend, it's different. But it's April 15th, unfortunately. So you may have to pay last year's taxes on April 15th, and then pay this year's taxes also on April 15th. So it's April 15th, June 15th, September 15th, and January 15th of the next year.
Okay.
Those dates never change unless they fall on a weekend or a holiday.
Okay.
You have to make those payments by that date. If you want to make them early, great. But the rule is, there's two ways of calculating it. Either you pay in by the fourth payment 100% of whatever last year's tax liability is. So it doesn't matter what you make this year. You can make significantly more, you can make significantly less. you pay 100% of what your total liability was last year. All that does is it helps you avoid that penalty.
Yep.
That's all that does. But the good news is you've paid into the system. So on your tax return, say you made more than you did last year, you paid most of it in and you'll owe some residual, but it's not going to be this humongous number.
Right.
Now, say you made a little bit less, you probably paid in too much, and then boom, you get a refund.
Yeah.
So what it is it's just making you avoid that underpayment penalty. The other formula is you pay in at least 90% of what this year's liability is going to be. So now you have to make some guesses. You have to project what you think you're going to make. Your accountant has to project, okay, based on all this information and all your income sources and your deductions, I project you're going to owe this in total. And then you have to pay at least 90% of that in those 4 payments. So that's a little bit more of a guess. So that's why a lot of people just do 100% of the prior year, because then it just eliminates all doubt and you avoid that underpayment penalty. So again, this is really something people should get an accountant involved in. The IRS does have a publication to help people make these calculations on their own, by the way. They have worksheets that you fill in and you crunch all the numbers, and then you can determine what your payment's going to be. But a lot of people aren't comfortable making those calculations, and that's when you start hiring someone to help you. But remember, it never hurts to overpay, because you'll just get it back when you file.
Yep.
But some people don't want to do that. They're like, I want my money.
I want my money now.
I don't want to give them more than I have to. But but other people they want to. They're like, I don't care. I don't want to ever get in trouble with them. I don't want to ever have a penalty. I'll get it back down the road. But some people are on a budget and they need that money to pay their bills. So I get it.
Yep.
There has to be this delicate balance sometimes, especially when you're starting out and you're not making a lot of money yet.
Yeah.
So this is when you do hire that expert, and they can work with you to meet all of your goals.
Good stuff.
Hope that answered the question.
Yeah, that was great. Very thorough. How many years should we keep tax records?
Well, the IRS can go back 7 years.
Okay.
However, if they suspect fraud, they can go back indefinitely.
Okay.
So as long as you're not committing fraud knowingly, then 7 years.
Folks,
7
no
years
fraud.
Yeah. Assuming you're not cheating and lying, 7 years.
7 years. Okay.
Yeah.
Fox Publisher says, how should I report royalties from book sales on my tax return?
So with royalties, if you're getting paid through, say, someone like Amazon, or the Draft to Digital, I know that there's
You're starting to know those names, aren't you?
Yeah, Babel Cube. Yeah, I see about yours and Kelly's. So they are going to issue you a 1099 MISC, which is miscellaneous income anyway. But you should be able to reconcile that to their 1099, if you're tracking things properly.
Okay.
You should be able to, I know, with you, we parse out Amazon income, or no, on Kelly's, I'm sorry. We have it by type, who she's getting the royalties from. So with that said, she should be able to chug out a year-end P&L. It's okay, how much were my Amazon royalties? She should be able to get that 1099 from Amazon, and it should be the same number or very close. There might be a slight timing difference, but it'll be a very immaterial amount.
Okay.
So you can reconcile to the 1099. So some people are of the mind well, I'm just going to report what's on the 1099. I mean, you could, but you really should be keeping track of your own stuff and actually comparing it. And then if there is this huge discrepancy, then you need to start investigating why. Because say for some reason Amazon is showing a significant higher amount of royalties than what you're showing, remember that form's going to the IRS, and they're going to expect you to report that amount. So if they get say you just do Amazon, just to keep it simple, and Amazon says that they paid you $10,000 in royalties, but your records only show $5,000. You're well, I only show $5,000. I'm going to report $5,000 in royalties on my tax return. You will get a letter from the IRS, almost guaranteed. It might take a while, but they're going to say, we got this 1099 from Amazon. They reported 10,000. You only reported 5,000. We need to have a chat. So it's don't take the 1099 at face value. Technically, you should be reporting your tax numbers off of your records. But yeah, when you get these forms, definitely compare. and,
Nice.
and see if it's the same number or very close.
Good stuff. Benjamin D says, should I file if I've made under a certain amount? For example, say 200 bucks.
In theory, if you made $1 in revenue, you're supposed to report it. Now, you're
Okay.
probably going to have expenses to offset it, so you might end up actually having a loss that can offset other income. But technically, the IRS says if you generate $1 of revenue, you should be reporting it on your tax return. And just to be on the safe side anyway,
Yeah.
because here's the thing, if you have a loss, you might be able to carry that loss forward to offset future gains. So it always behooves you to report accurately, I think. That's my opinion. I, again, talk with your specific, accountants and run that idea by them. But for me personally, I'm very conservative with my clients. I don't take aggressive stances with the tax rules. I attempt to follow them to the letter. So that is my opinion, but I always err on the side of honesty and just dead on accuracy. That's me.
That's good. Fox Publishers has another one for you here. Are advance payments from publishers considered taxable income, and when should they be reported?
So when you report it depends on what type of reporter you are. Most people are what's called cash basis, which means you only report cash you actually received or cash you actually spent. Credit cards are included in that. Even with unpaid balances, credit cards are included. Accrual reporters are, it's hard to translate this to self-publishing. So let's take my business, for example.
Okay.
Okay. I do the service and I bill the client on December 31st, but I don't get paid till January. Because the invoice date is in December, I have to claim it as income, whether I got the money or not. This is why most people don't want to do accrual. They only want to pay taxes on money they actually got,
Okay.
not money that they're going to get that there's a potential the client won't pay or whatever.
Mm-hmm.
So I would say most self-publishers are going to be cash basis reporters.
Mm-hmm.
So with that said, if you get money in advance, that is income. Now, say like the next year, for some reason, you have to pay part of that back. Then you can deduct that as an expense.
Okay.
But yeah, it's based on when you actually physically receive the money in your hot hands or the money leaves your hot hands.
Okay. Very
That's
good.
cash basis.
Do you have time for another couple questions?
Of course. Yes. No, I've blocked out my entire afternoon for you.
Good stuff. All right. Here's a hot question. I'm not sure if you'll be able to get this one here. Fox Publishers loading us up here. If I receive income from international book sales, how is it taxed in the U.S.?
International taxation is not my cup of tea because most countries have tax treaties with the United States. And it's like you kind of have to be up to date on the tax treaties of that particular country. But with that said, I know like Amazon, and this is related, like sales tax. So Amazon will collect the sales tax and they'll handle all the filings so the author doesn't. So international taxes might work the same way if, say, Amazon's in the mix, where they get the money first and then they pay you the royalties. They might have it set up where it's deemed they got the money first from that country. So that might be something they deal with, but that would be something that you'd have to research on your own to see, because they should tell you flat out, we'll handle that, or no, that's your responsibility. You need to get with your accountant. Yeah. So that's very difficult to answer because there's so many countries, and almost every country has some sort of tax treaty with the United States.
Yep. Can I deduct travel expenses for book tours, conferences, or research trips? Can I answer this one? Can I answer this? Yes. Yes, you can. It's actually one of my favorite things about doing a lot of the in-person conferences, because then I can go ahead and send that over to Erin and she gets to handle all of it for me.
Yes. Yeah, absolutely. So yeah, if the reason for the travel is for your business, whether it be to promote your business or to network or education, like maybe a seminar, absolutely. What I tell people, when people say, well, how do I know if it's a business expense? How do I know if it's a personal expense? The general rule of thumb is you got to ask yourself the question, if I didn't have my business, would I still be paying this? If the answer is yes, it's probably not a business expense. like the people say, oh, well, I have internet. I'm using my internet, for business. But it's like, but wouldn't you still have internet at home? Because most people do. Now with the home office deduction, yeah, you get to deduct a portion of your internet, but your business should not be paying for it because you probably need it anyway, whether you had the business or not. So if you're traveling to say, a book related conference or seminar, and you're doing it to either just brush up on your writing skills or network with other authors or promote your books, absolutely. Yeah, 100%. Just remember, travel meals, like regular business meals, are only 50% deductible.
Yeah, don't go hog wild on the
And
food.
provided they're not extravagant either.
Right,
So,
right.
you don't, I'm not saying you have to go to McDonald's, but you may not want to go to, I don't know, Ruth Chris Steakhouse,
There you
or
go.
I don't know. I don't know what the highfalutin restaurants are anymore, but
Right.
so it can't be deemed extravagant.
Yeah.
But yeah, I mean, if you want to take a couple people out to a decent restaurant, of course, just, no, don't, be popping the Chris and all that stuff, don't get a bottle of Dom
Yeah.
and live it
Living the
up.
high life.
Right, yeah.
Okay, Fox Publishers got even more. Are there tax benefits for donating copies of my books to libraries, schools, or nonprofits?
Usually no. Now, if you get some sort of acknowledgement letter, like saying that you did make a donation to like a nonprofit, like a 501 C3, 3C. God, I'm dyslexic
You're
today.
right. You actually got it the first time.
Okay, cool. If you get like an acknowledgement letter saying, that the face value of the book like is considered a donation, it's not a business expense. So that's one thing to be very clear about charitable contributions is even if you're an S corp, they're not deductible for the business. It's always deductible on the personal level. So if you itemize deductions on your personal return, then yeah, you include those donations. But if you don't itemize, then there's no deduction to be had. So be careful with donations, because I tell business owners, I'm like, if you're doing it because you want to, or if you're doing it maybe to show like your business is, an active part of the community, things
Yeah.
like that. If you're doing it for like goodwill, by all means do it. But remember, your business isn't going to get the deduction for it. It passes through the personal, and you may or may not use the deduction. So don't do it as a strategy, is what I guess is what I'm trying to get at. But so if you do donate it, there's nothing to record in your books because you probably already recorded the cost of making that book and publishing that book. That's already recorded.
Yeah.
But it's not like there's nothing like considered missed revenue, I guess is what I think what they're getting at. It's like, well, I didn't sell this book, I gave it away. You can deduct the cost of what it cost you to make that book and get assemble the book,
Yeah.
but that's it.
Gotcha. Benjamin's got a couple questions here for us. If I've already stated using my personal bank account, should I still open a new account or keep the one I've been using, especially if all I usually get are my royalties?
As long as you're confident that that you can pick them out, if you can adequately segregate it, fine. I mean, like I said, it's not an absolute requirement, especially if you're a sole proprietor. There's no law saying you have to open up your own bank account. So if you do, you might want to maybe start like the beginning of the year so there's a nice clean cutoff. So it's like, okay, I know for 2024 everything's going to be in this one account, but going into 2025 everything's going to be in this other account. So you might want to do it that way. But if it's just royalties and you don't have any expenses, I mean, there's nothing wrong with doing it. But if you can open up a bank account that has like, say, no monthly service fees, you got nothing to lose, really.
Yeah, and there's a lot of
And you might,
banks out there that provide that too.
oh
So
yeah, lots. And the thing is you might grow your business and get in other things and start incurring expenses or having different revenue streams or something. So again, get with a tax person or an accountant, and they can look over, your specific situation
yeah,
and then make recommendations more personalized to your specific situation. And again, also what your goals are and making sure your goals are in line with IRS regulations. As long as your goals don't defy IRS rules, you're fine.
gotcha. Next question. What can qualify as a tax exemption and how do I report it? Wow, we're going to be here for the next 5 hours, I have a feeling.
I don't know what they mean by tax exemption.
Yeah.
I mean, like a not-for-profit where they're not subject to income taxes? Are they talking about
I'm
exempt
wondering
from
if
sales
Benjamin's
tax?
asking about like a tax write-off is probably what he might be getting at there.
Okay, so say the question again then.
So, what can qualify as a tax exemption, and how do I report it?
Assuming we are talking about
Yeah, he
business
confirmed tax
expenses.
write-off.
Okay. So I did kind of cover that before, where it's like it's a business expense. Like if you can say, if it weren't for the business, I wouldn't be spending this money.
Okay.
Another way, like the lingo that tax people use, is it an ordinary and necessary expense to operate your business? So that's when you look at, say, like industry standards. Are other people in my industry, are they spending their money on this type of expense?
Mm-hmm.
If it's like the everybody's doing it, I mean, and you got to be careful of that assumption too. But if it's a bona fide business expense, like I need to incur this expense to accomplish this business goal, then yeah, of course it would be a deduction. Just keep your receipts.
Mm-hmm.
Again, and again, you can, if there's specific expenses you're not sure about, run them by your accountant. Say, hey, I want to do this, like, and do it before, ask before you do it. Be proactive and say, hey, I'm planning on, or I would like to do this. Would this be deductible on the tax return for the business? And then you can get a more definitive answer, because it's really hard to answer that in general.
Yeah, yeah. There's so many moving parts to this one. All right, we're going to do
Yeah.
one more question and start to wrap up today's broadcast. This one comes from Fox Publishers. What tax forms do I need to provide for subcontractors like editors, illustrators that I hire?
Okay, so that's going to depend. So that'd be a 1099 NEC, which stands for non-employee compensation. So there are some parameters for that. So who gets one? Okay, well, first of all, I'll tell you who doesn't get one is any kind of corporation. So this is why you have people complete a Form W-9, which again, you can do an internet search. You can grab a blank one, save it for your records, and have people complete these things. Or make a stack of them, print them out, if you're in person or whatever. So that's why they fill out these W-9s. They fill them out for a couple of reasons. First of all, it helps you determine if they need one. And if they do, then you have like their address and their social security number or federal ID number, so you can't actually issue it.
Okay.
So it's important to get a W-9 before you pay anybody. And the reason I say that is because some people are savvy and they know, like, oh, if I go over the certain dollar limit, I should get a 1099. So then, like, oh, wait, I need to get one from you. I paid you, $2,000. And then guess what? They refuse to give you one. Right. Or they ghost you, like you can't find them. They're not responding to your phone calls or emails or texts. So eliminate that possibility by giving them a W-9, whether in person, or send them a blank form, a fillable form, and say, I will not pay you until you give this back to me. Gotcha. And then if they don't give it back to you, then you don't use them. I mean, they might be a little shady anyway. I mean, it's low-key tax evasion, if you ask me, if they refuse to give you one, because they know if you can't report the IRS, and the IRS doesn't know about it. So so on the W-9, they have to say, like, am I a sole proprietor? Am I a single member LLC? Am I a partnership, a C Corp, an S Corp? Corporations do not get 1099. So if they check that they're an S Corp, you don't have to give them a 1099. It also is based on dollar amount. So if it's $600 or more for the year, they're eligible to get one. The last requirement is how you pay them. So if you pay everybody with a debit or credit card, you never have to issue a 1099.
Okay.
Same with PayPal. Well, that's a tricky one, because if they ask you to pay friends and family, you're probably going to have to 1099 them. Now, if they have a business,
touch that friends and family, man. No,
yeah,
nope.
Yeah. But if they have like a business PayPal and you're paying them that way, then PayPal will 1099 them. Same with like the card processor. So if you pay them debit or credit card, they will get a 1099K from their credit card processor. That's why you don't give them one, because someone else is going to do it for you. So you only have to worry about if you pay cash, check, or any kind of ACH. So that would be like Zelle, just an online bank transfer, where it's routing number, account number. So if you pay with those methods, you pay them $600 or more for the year, and they're not a corporation, they get a 1099.
Okay.
Yeah, that's it in a nutshell. Again, there's exceptions. but that is the kind of the overarching rules of 1099s.
Very good. Fox Publisher says, thank you. Great information. Benjamin says, thank you for your help. And DL Tillery says, thank you both. Erin, we've blasted through an hour like it's nobody's business. I
I
always
can't
know that
believe it.
it's going to be easy. I mean, this is the third time you've come here on the channel. I appreciate it every single year that you come here. And folks, if you do enjoy it, let us know inside the comments, because I'm sure Erin would love to come back, answer any kind of questions that you have. But in the meantime, how can people get a hold of you, Erin?
You can visit my website at www.organized, that's a D, organizedpiggy.com, Piggy like a piggy bank. I do have a free ebook you can download, which is the top 6 most frequently asked text questions I get from business owners. So it does cover mileage, home office, meals, what kind of return you file, all that good stuff, absolutely free of charge. It's a little, I think, 11-page ebook, quick, nice, easy read. You will get like 3 follow-up emails from me just with additional information. One of them's on 1099, as a matter of fact. And I think after like the 3rd or 4th one, they stop. So I'm not going to like endlessly spam people. And there's also a button there if you'd like to book a consultation on my consultation calendar. The consultation is an opportunity for us to discuss, what your needs are, what services I provide, and just see if it's a good fit and it makes sense to work together. It's not like a Q&A session. It is a consult to see if it's beneficial for us to work together. So you can also hit that button on my website, and we can book a consult and chat further.
Well, I can personally attest to how awesome it is to work with you, Erin. I mean, shoot, Kelly and I have known you for quite a while. We were in Phoenix, so we're going on 10 years, maybe? 2016?
Yeah, I had that networking group, and that's where we met, was in that networking group. And then we just stayed in touch and had lunch together and all that good stuff. And
yeah, gosh, I can think of a few times. It was awesome. It was good. Well, folks, please, any more information you want to find out through Erin, obviously go to organizedpiggy.com. Erin, I'm going to kick you back over into the green room here because I need to see about talking to some of the viewers before we go ahead and disconnect here. Join me on Tuesday, January 7th at 2:15 p.m. Eastern Daytime for an exclusive interview with the co-founders of the new digital narration platform and audiobook streaming service called Spoken.Press. We're going to get insights into this revolutionary new digital narration service that stands apart from the rest of the services on the market today. Till later, this has been Self-Publishing with Dale, and I'll see you next year. Hey, thanks so much for tuning in. Special shout out to my channel members for both the podcast channel and the main channel. Without your support, some projects we do at Self-Publishing with Dale would be much harder to fund. If you want to contribute to the cause, visit dalelinks.com/memberships for details and get your on-screen shout out at the end of each broadcast. Till later, this has been Self-Publishing with Dale, and I'll see you soon.